The news just dropped like a bombshell on Wall Street. President Trump has nominated Kevin Warsh to replace Jerome Powell as Federal Reserve Chair, effective when Powell's term ends in May 2026. This isn't a firing in the dramatic sense. Trump can't outright fire Powell mid-term without massive legal battles. But it's the clearest signal yet that the era of Powell's cautious, data-driven approach is coming to an end. Trump has been hammering Powell for months over not slashing interest rates fast enough, and now he's handpicking a successor who's been openly critical of the current Fed leadership. This move is exploding across markets right now because the Fed chair controls the lever on interest rates, which directly hits everything from your mortgage payments and credit card debt to stock valuations, bond yields, and even commodity prices. In 2026, with Trump's agenda in full swing, tariffs, deregulation, potential tax cuts, this leadership change could turbocharge or derail the economic playbook investors are betting on. Let's break this down like insiders do over coffee. What really happened? Who Warsh is? Why Trump wants him? And, most importantly, what it means for your wallet, your portfolio, and the broader economy heading into the rest of 2026. First, the timeline. Jerome Powell's chair term officially wraps up in May 2026. Trump announced the nomination of Kevin Warsh on January 30th, 2026, after weeks of speculation and relentless public pressure on Powell to cut rates more aggressively. Powell has held the benchmark federal funds rate steady recently, around 3.5 to 3.75%, pausing after some earlier reductions, citing sticky inflation and a still solid economy. Trump? He's called that restrictive and unwise, pushing for much lower rates to fuel growth. Warsh, a former Fed governor from 2006 to 2011, Morgan Stanley alum, and Hoover Institution fellow, was actually a finalist back in 2017 when Trump picked Powell instead, something Trump has since said was a mistake. Warsh has Wall Street cred, academic chops, and a history of criticizing Fed mission creep into areas like climate and heavy regulation. But here's the twist. While he's historically been an inflation hawk, favoring higher rates to crush price pressures, he's shifted in recent years. In late 2025 op-eds and interviews, he's argued the Fed should cut rates now, blaming Powell's leadership for poor choices and pointing to potential productivity booms from AI and deregulation as reasons inflation could stay tame even with easier money. Market reaction so far? Stocks dipped initially on the news amid uncertainty about Senate confirmation and Fed independence fears. But bonds rallied slightly, yields dipped, betting on a more dovish tilt ahead. The dollar weakened a touch against majors. Traders are pricing in a higher chance of rate cuts resuming later in 2026 once Warsh potentially takes the helm, if the Senate confirms him, which looks likely but not guaranteed given his past hawkish bent and the drama around Fed autonomy. Now, the big question, what does this mean for interest rates in 2026? Under Powell, the Fed has been methodical, data-dependent, focused on the dual mandate of maximum employment and 2% inflation. They've cut some, but paused when inflation didn't cooperate. Warsh? He wants regime change. He advocates a smaller Fed balance sheet, unwinding quantitative easing distortions, less forward guidance, and potentially more flexible rate policy. Crucially, he aligns with the view that AI-driven productivity gains could allow faster growth without reigniting inflation, meaning room for lower rates without the old hawkish fears. If confirmed and in charge by mid-2026, expect a push for resumed cuts, maybe 50 to 75 basis points or more through the year, if growth holds and inflation eases. Trump wants rock-bottom rates, think sub 2% eventually. But Warsh isn't a guaranteed rubber stamp. His hawkish roots could mean he resists if inflation ticks up from tariffs or fiscal spending. Still, this is the most dovish-friendly pick Trump could make without going full outsider. Winners and losers in your finances and investments. Borrowers win big. Lower rates mean cheaper mortgages, potentially dropping from approximately 6 to 7% to sub 5% by late 2026. Auto loans, credit cards. Refinance now if you're locked in high. This could save thousands annually. Stock market boost, especially growth/tech. Lower rates juice valuations on future earnings. AI, tech, and high-growth names, think NASDAQ heavies, could rally hard. Deregulation tailwinds amplify this. Bondholders. Existing long-duration bonds gain as yields fall, but new buyers get lower returns. Savers and retirees lose short-term CD yields. Money markets drop. Expect 4% plus yields to compress toward 3% or lower. Commodities mixed. Gold and crypto often love lower real rates. Energy and industrials benefit from growth, but tariffs could complicate. Dollar and imports. Weaker dollar helps exporters but raises import costs. Watch inflation pass through. Hidden opportunities. If Warsh delivers on balance sheet reduction while cutting rates, it could create a Goldilocks scenario, growth without inflation spikes. Position in productivity plays. AI stocks, infrastructure, domestic manufacturing reshoring. Risks. Senate fight delays confirmation, or if inflation reaccelerates, tariffs plus fiscal stimulus, Warsh's hawk side emerges and rates stay higher longer, hitting stocks and housing. Bottom line for 2026. This nomination tilts the Fed toward easier money and away from Powell's caution. It's not a guaranteed Trump takeover. The Fed's independence is resilient, and FOMC votes are collective. But it's the clearest pivot yet toward pro-growth, lower-rate policy. Your borrowing costs could fall. Your portfolio could surge if you're positioned right. But savers beware and watch inflation like a hawk. One actionable insight: review your debt now. Lock in fixed rates where possible before cuts hit. And consider adding exposure to rate-sensitive sectors like real estate, tech, and financials if you're bullish on this shift. If this kind of real-time geopolitical finance breakdown moves you, hit subscribe and turn on notifications. We're tracking these market-shaking events every week at WealthForge. Drop in the comments. Do you think Warsh gets confirmed and delivers lower rates? Let's discuss.